How's it, guys? Welcome back to FX Rhapsody. Today we're going to be looking at a buying and selling opportunity on the 15-minute time frame. This is basically an attachment to my previous video about smart money and the fair value gap. So just want to show you an example. I've had a comment in one of my videos asking the previous video if this strategy or the way that smart money works, will it work on the 15 minutes? And I just thought, just give a quick example just to show you that any time frame it's possible to trade this on. Before we hit the charts, just go visit my website on the bottom left hand side corner. All my videos is right there, all categorized nicely. COT reports also there in the resource tab to be downloaded, and also my preferred brokers. Go watch them, go look at them. I'll explain everything about those brokers in the resource tab. So just go visit my website and you will get all these nice goodies. Okay, so let's hit the charts. So basically, as you can see, 15 minutes on the British pound US dollar. Okay, we had this big push to the downside. So then price started consolidating, making its moves and just going sideways. I'm just going to draw a little line here, which is going to be our structure. And as you can see, there is going to be a time and point where the structure is being broken. Now, one thing we need to realize about, price action, smart money, it's hunting liquidity always. Okay, it is hunting liquidity. And for this to work, we need price to go hunt that liquidity. And usually that gap will form, or it's going to be more accurate when it starts hunting or when it hunted liquidity and then move to the opposite side. So we can see this consolidation, we see these two breakouts. Okay, this is previous highs, previous lows. So let's just drill in a bit more so we can see. Okay, so we can see price going, hunting the liquidity at the bottom. Okay, so price going into that liquidity pool and then starts moving to the upside. Now, where do we want price to break for this to happen? So now just watch very carefully here. So price going up, forming this new, let's call it a high or structure. Okay, right there. So that point in time, price comes down again and then starts pushing up. And now this bullish candle, this big push, is where smart money comes into play. It pushes straight through, breaking that structure, like we said. For those of you that haven't watched my previous video on smart money concepts, go watch it. It is very insightful. And again, like I said, this is basically an attachment to that video. So basically, what we do is, or what price action does, or smart money, it pushes through, and then we are going to wait, because now it's leaving this gap over here, the fair value gap in between, and this is going to be the block area. You extend it, okay, because you don't know when and where price is going to come and go into this block. Now that gap area, that fair value gap area, is going to be between, just going to make this another color. It's right there. Let's make it a straight line. So it's going to be the area between that wick, this one over here, and that wick. Oops. Now this wick over here. So it is that gap it leaves when this candle pushes through the previous structure that was created. So that gap is going to be fair value gap. And like I said, anywhere in this gap, price needs to come and basically fill this gap. Not fill it, but go into the gap. What I usually do is I pull my Fibonacci, and normally price comes into the 50%. That's going to be a very accurate one. But I mean, anywhere in this gap, if you see price going in this area, this is where you start placing your orders. Okay, so we can see price touching that area. But before I go there, we have a scenario at the top where price broke out. Okay, so you see price breaking up to the upside, hunting that liquidity, basically, and then pushing down to the downside again. Okay, so with this push, just want to show you here, right there, that is a break of structure as well. Just want to do the, no, let's leave it at that. Let's do red again. So we keep the, okay. So that area was going to be your low after this push into liquidity. The liquidity pool basically, price pushing down again. Now what we do is we wait for that area to come and retrace into the fair value gap, because if this was your previous low when price came up and then price pushing through it, it left the gap, and again the gap is going to be for that candle. I'm just going to do this so we keep this, so it's going to be for that candle over here, the one previous to the push through the structure. And let's take that. Okay, so you see that area in between where structure was broken, so that was your previous low. Breaking that structure, pushing back into it, leaving that gap. Yes, we have more gaps here, gaps being filled, but I'm always looking at the one where structure has been broken, that gap. The first liquidity, the first fair value gap is normally the main one, so that gap over there. Okay, so if I zoom out, so what do we have? We have two areas. Area number one, we're waiting for price to come down into this gap so we can trade it up. Okay, we need this gap to be filled to be able to trade it up. Then area number two, now we're waiting because now 15 minutes, now we've highlighted all these areas. Okay, this is now price going up, and we see structure being broken, so we highlight the area, the fair value gap area. Now we're waiting patiently. As this happens, we can see price breaking that area of liquidity or hunting that liquidity pool, because we see this was a consolidation area. So we know that there's liquidity lying at the top and at the bottom. Price going and breaking that liquidity at the top, or hunting or going into that liquidity pool, and then pushing down and again forming a fair value gap. Now we've got two opportunities. This is not all in one day. This is now playing out. So now we see price going down. We wait patiently for this, and eventually price goes into our liquidity pool. We place our buy. Okay. And our stop loss just below where candle started breaking out. Right about there. I always place it just below that push of the candle. So now we have that push to the upside. Okay, so now we in this buy and price starts pushing up. Where do we climb out? We know that there's another area of liquidity of fair value gap that price is going into, and that's basically when it gets to that point or area in time, that's when you climb out. Okay, so I'm going to leave that in just for you to see. So our area of take profit, or our area of climbing out of this trade, will be there. So you're having a 14 to 15 pip stop loss or risk for a reward of 76 pips. That's our reward. That's our take profit area. So we climb out of the trade goes and taps that fair value gap area, and now what do? We sell, because now we've been waiting patiently for that price to fill that. Let me just take this out again. So now we've been waiting patiently because we've, first scenario played out. Price coming into this fair value gap area, we buy up, we climb out because we've highlighted another area at the top where price needs to come in, retrace back into that fair value gap. So that's going to be our area 2, where we sell. And like you see, we buy up 76 pips, we start selling at the top, because now this is another opportunity in the day. We sell, stop loss just above that area, right about there, and now you start writing it down. Because we haven't seen any other movement, so now we just need to wait patiently and look at this. Price going up again into that area. Going up, it's consolidating, and eventually breaking that area at the top there. So this is now another sell opportunity where you could have had, if you had to write it down to that area at least, another 81 pips for, what was that? 13 pip risk. So guys, always be careful. Well, not careful, but just look out for these areas in the market. And this is 15 minutes, guys. The 15 minutes, the 5 minutes, the 1 hour, 30 minutes, doesn't matter what time frame you trade. Use this. I'm not going to call it a strategy, but this is the way, with this fair value gap, this is the way smart money trades, guys. And this is what they're waiting for. And don't think, oh no, smart money is only for, for the big institutes, the guys that's, trading those long swing trades. And that's not what it is about, okay? I will still make another video about, how it works and all that. And you guys think it's just, the big moves that they're waiting for. It's not. It is really not. This is definitely the way to go forward, especially trading your currencies. It doesn't matter what currency pair you trade. Go to your charts and go see. I mean, if we scroll to the left, what is happening here? This is now current time. Okay. So basically we see that push to the upside. We see that low forming and then push up again. And now with this low over here. Okay. With this low. There we go. It's another structure in the market. Okay. This is now current time. Let's just see what happens here. I didn't check the current situation yet. But again, as you can see, this is the low that was formed. Price going up, into that liquidity pool. There's no pulling back on this yet. So over here, price breaking that area, going up. And what does it do? It leaves a fair value gap, a very small one. But it does. This is 15 minutes. I'm just going to expand it a little bit because you can see there is a gap in here. Okay, that's a gap in there. So price going down, going up into that gap area. Okay, again, you place your sell once price gets there. You go up. Where's that breaking candle right there? There's your risk, just above that high of that breakthrough candle, or that candle that broke through that structure, just above that, 13 pips, and if you are in this sell, if you saw this, currently it's a 52 pip reward currently, and it's all up to you how long you're going to hold it. But I mean, guys, that's how it works. It works every single time. All you need to do is go practice it. And practice meaning go back in your chart. Don't be scared to just go back. Just like I do right here. This is meaning go back test it, go back in chart, scroll back into time. Look at your structured areas where price might have broken through, coming back and all that. Go look for those areas and then go draw these lines that I'm doing here. Practice your brain, guys. You're not going to get better if you don't do that. And then watch it happens. And then the more you do it, the more you'll see it happen. Sometimes even without drawing these little diagrams and little blocks and little structured areas, you get so used to it that you just see it happen and you trade a clean chart. So guys, it's a quick little video just to show you on a 15-minute time frame on how it actually plays out. And again, for those of you that haven't watched my video about smart money concepts, go watch it. It's really insightful, and I'm pretty sure it's going to help a lot of people in their trading. So guys, this is all from my side. I hope you enjoyed this. Press that like button, hit that notification bell, subscribe to my channel, and comment in the comment section. There's definitely some more video content coming your way. And guys, I hope you're having a wonderful, wonderful day. Stay safe and happy trading, guys.